Hello and welcome to the week ahead video with me, Dave Madden. We are looking ahead to the week beginning Monday the 18th of June until Friday the 22nd of June, and today's video is being recorded on Friday the 15th of June and the time has just gone 10:45 British Summer Time. Now, before we take a look ahead to next week, let's just recap on some of the big events that we saw in the week just gone. So on Wednesday night, we had an update from the Federal Reserve. They raised interest rates by 0.25%, in line with expectations, but also the language they used suggested we could see two more rate hikes from the Federal Reserve in 2018. But also, Jerome Powell, the chair of the Federal Reserve, cautioned the market that international developments, i.e. the potential trade war that's hanging over the United States, could actually cause the Federal Reserve to alter its policy. Yesterday, on Thursday, we had an update from the European Central Bank. The ECB made it clear that they're going to wind down the stimulus package by the end of 2018, in line with expectations. But Mario Draghi, the president of the European Central Bank, stated basically we're not going to see a rate rise from the European Central Bank until at least the back end of 2019, if we see one at all in 2019. So what we saw yesterday was a sharp move lower on the euro and a sharp move higher on eurozone equities. This morning we're seeing a bit of a bounce back, a nudge higher in both the single currency, and on the flip side of that, we are seeing some profits being taken on European equities. Traders are also a bit concerned about the latest developments in relation to the potential trade war. Beijing have come out and stated that if America does press ahead with the planned tariffs, they are going to respond. Beijing also made it very clear that any previous negotiations or any previous deals with the United States will be off if these tariffs go ahead. So in terms of actually looking ahead to next week, on Tuesday and Wednesday we have housing data coming out of the United States. We have building permits, housing starts, and existing home sales. Essentially, we've seen a slight cooling in the US housing market in terms of the data in recent months, but we're not too far away from multi-year highs on many of these indicators. As I mentioned, the Federal Reserve is in the process of raising rates, and that really hasn't deterred the growth rate in the housing market. So keep an eye out for that. Those figures are coming out on Tuesday and Wednesday. Looking ahead to Thursday, we have a couple of central bank updates. The first one in the morning, the SNB, the Swiss National Bank, rates are expected to remain unchanged at negative 0.25%. The ECB have had the same rate since early 2015. Recently, we've seen inflation in Switzerland actually hit 1%, its highest level since March 2011. So the very aggressive policy of having negative rates is finally paying off. But recently, Thomas Jordan, the head of the Swiss National Bank, stated that it's still too soon for anything to change to interest rates. The recent news that Italy has officially pledged itself to the euro will also help stabilise the Swiss franc, because the Swiss franc can often be seen as a bit of a safe haven play. Looking ahead to Thursday, we have the Bank of England decision. Rates are expected to remain unchanged at 0.25%, and the stimulus package is tipped to remain unchanged at £435 billion. At the most recent update, we had a couple of dissenters, Ian McCafferty, who has form, and also Michael Saunders. It's worth pointing out that some of the recent economic indicators in the UK have been just ever so slightly on the cool side. We saw wages this week grow at a slightly slower rate than previously, and also came in just below expectations. And also the CPI rate held steady at 2.4%, while we're actually expecting an increase to 2.5%. So this would kind of suggest that there's a bit of a slight. This would suggest that the UK economy isn't probably as growing as fast as central bankers would like it. In particular, the actual wage growth figure. Wages would really need to pick up to kind of warrant more interest rate hikes from the Bank of England. Beginning on Thursday and crossing over to Friday, we have the OPEC meeting. The major group of oil producers are meeting in Vienna, and there's the speculation that we could see an increase in supply. Obviously, the arrangement that's currently in place, OPEC and the non-OPEC group headed by Russia, effectively have an agreement in place to curb or freeze production, and that's why we saw multi-year highs on the oil market only last month. But now there's talk that Russia and Saudi Arabia are looking to increase prices. So given that they're quite influential in their respective groups, the OPEC group and the non-OPEC group, we could see OPEC look to actually increase supply. It's worth pointing out during the week, the United States of America confirmed that oil production in the US is at its record high, and it's not too far away. They're not too far behind Russia in terms of actual daily output. So the rise of the shale producers in the United States has led to American production hitting all-time highs. And like I said, they're not too far away. They're not too far behind Russia in terms of actual output. Finally, on Friday, looking at in terms of economic data, we have the services and manufacturing PMI reports from all the major Eurozone countries and, of course, the Eurozone itself. This would be of particular importance given that the update from the European Central Bank only yesterday was not more dovish than traders were anticipating. In terms of corporate results, on Tuesday, we have fourth quarter figures from Ashtead. Ashtead are the plantar company which are headquartered in the UK, but derive a good portion, the majority of their earnings in the United States. So the various different hurricanes that unfortunately the US has incurred in recent months, Hurricane Irma and Hurricane Harvey and Maria, all have actually led to an increase in demand and revenue for at Ashtead. At the most recent update back at the beginning of the year, Ashtead stated that they were actually being hit by the relatively weak dollar, but since then the US dollar has appreciated greatly, so that actually should trickle down into the fourth quarter figures. And on Wednesday rather, we have full year figures from the home builder Berkeley Group. Berkeley Group stated that they're still on track to achieve their target of £3.3 billion pre-tax profit before 2021. Although the company did warn that fixed certain limits on mortgage lending and also rising costs and also a bit of overall economic uncertainty is slightly kind of weighing on the company, but recently we had the share price at an all-time high, so that would just give an indication of how bullish the sentiment actually is. Taking a quick look now at a few of the markets and see what we can potentially expect. Take a look at the FTSE 100. It's had a very impressive run between March and May. We had a bit of a pullback here, and now we appear to be edging higher yet again. Notice the decline in the MACD indicator and the negative momentum. So as the market's pushing higher, negative momentum is declining, so we could see this move push higher. If you hold north of this area here, 75.91, we could be looking at heading back up towards 7,800 or perhaps even 7,900. Take a look at what's going on over in the German market. This is obviously the positive move in Germany yesterday on the back of the more dovish than expected update from the European Central Bank. So obviously pushing higher once again from late March, decent move higher on the German market and the DAX. A bit of consolidation in the middle of the month around the 200-day moving average, but we now moved firmly above that. While we remain north of the 200-day moving average, this red line here, which comes into play at 12,767, the outlook is likely to remain positive, but we will need to clear this high here from mid-May, which comes into play at 13,200. A move beyond that could see us headed back up towards 13,400. We've seen a bit of consolidation there recently, back at the beginning of the year. A move beyond 13,400 could bring 13,600 into play. Sticking with the theme of indices, looking at the Dow Jones, after many months of kind of almost ever so gradually moving higher, we could be in the beginning of an upward trend for the Dow Jones. An upward trend is defined as a series of higher highs and higher lows. And if you look at the highs here from April and May and also June, have all been in upward sequence. And we can see here go from the lows, lower low, lower low, lower low. So this could be the beginning of the Dow recently hit a 3-month high. We've come back a bit ever so slightly because of the profit taking and uncertainty around trade and an interest rate hike from the Fed. But this could be the beginning of the Fed's next move higher. We could find support coming into play in around the 25,000 mark, and if we continue to push higher, we could be looking at targeting the early March high of 25,507, and a move beyond that could take us to the mid-February high of 25,821. Move to the downside, might find some support at the 30 moving average, this red line here, which comes into play at 24,263, and move south of that could take us back down towards this trend line here, which come into play in around 23,800-ish. Taking a look now at other markets. Taking a look now at pound, at the euro versus the US dollar. So euro dollar is obviously a major sell-off yesterday, which fits in with the major sell-off that we've seen from April down to late May. The trend is very much pointing to the downside. If you take off the recent low here at 115.10, we could be heading it back down towards the 113 or the 112 area. It's only if we move north of these recent highs here in around the 1835 area could then we become more confident that the recent negative trend has come to an end. Taking a look now at what's going on in pound US dollar. Similar situation here, had a major sell-off in the pound versus the US dollar. We're almost back testing the May lows, which come into play at 132.04. A break below 132.04 could take us back down towards 131, or perhaps even the lows here that seen in October and November of 130, one spot 30.27. As I mentioned, we have the big OPEC meeting beginning on Thursday. So OPEC, the oil market hit a 42-month high in May, so only about a month ago. But since then, we have been kind of edging a bit lower. And now there's talk of supply being increased, so we could see further downward pressure on the oil market. So this could be the beginning of a move lower in the oil market. Notice how we have a lower low, a lower high, a lower low, and a lower high. So keep an eye out for this area here in around 73.10 on Brent crude oil. If you take out 73.10, it could take us back down towards 72, or perhaps even as low as 71. And a move higher could run into resistance at the late May high of 78.98. And if we go beyond that, we could be looking at back up towards the 81 region. And finally, it's a similar rough chart on WTI, but WTI has had a more aggressive sell-off recently. So after hitting a 42-month high, we've been under a fair bit of pressure on WTI. But notice how the market's bounced back a bit, but also we're actually managed to hold above this yellow line here, the 100-day moving average, which comes into play at 65.45. If you can hold north of that, we could be looking at targeting the 50-day moving average, this blue line here, at 68.51. And then beyond that, we could be heading towards $70 a barrel. But like I was saying, we've been a bit of a downtrend recently in the last month or so. There's talk of supply being increased. So if we do move south of the 100-day moving average, we could be looking at retesting the late May low of 64.18, and a move south of that could bring the early April low of 61.78 into play. Well, that's all from me this week. Thank you very much.